Hi, welcome. Thanks for joining us this evening for the first Silicon Slopes SMB deep dive. This is the first in a series. Our intent is to deep dive on a number of topics every Thursday evening at 5 p.m. For 90 minutes. We're here to help. I'm Jeremy Andrus. I'm the CEO of Trader Grills. I'm an entrepreneur. My brother is a restaurant owner. My father's a hotel owner. We are a family of entrepreneurs. A month ago, Clint Betts, who's the executive director of Silicon Slopes, reached out and asked me to chair an economic impact committee. I have to tell you, as I talk to small business owners, and I think about what we're going through right now, I have a real passion to be helpful, as does the team that I've assembled and the panelists that we're going to speak with this evening. We realize this is a challenging moment, but we also believe that there's some good opportunities if you act intelligently, if you have all of the information, if you are able to really be efficient. We think there are opportunities for you, and we want to help you manage through this. That is really our intent. We only have one dog in the fight, and that's to help small businesses here in Utah. We have been busy building content on slopeserves.com, but now we want to be more interactive. Now we want to take some topics and really go deep, and we want to select these topics that are timely. This is a fluid environment. In fact, a few minutes ago, I received a text from someone on GoEd's board. GoEd is the governor's Office of Economic Development, who said that last week GoEd dispersed $6 million of loan funds to 500 small businesses. It's not a big amount per business, but it was dispersed quickly. On April 13th, which is Monday, they will make another $5 million available. If you applied and were not accepted, there's no need to reapply. It will be available for nonprofits as well. And I think this is an example of how fluid this environment is. And so our intent in this series, this SMB series, really is to make sure that we're speaking to timely, relevant topics, and we are giving you the most current, most valuable information. I want to introduce quickly the panel, and then we will jump into business. Our panelist, first of all, is our moderator is Stephen Brown. Stephen has been an incredible value to this community. He's been on the front line. Stephen is a co-founder and COO of Ledger Gurus, who provides outsourced accounting services to other businesses, empowering them to build with better numbers. I want to say thank you to Stephen. He has truly, for small businesses, been a first responder. And this is important. We recognize how this moment will define the future of your business, and Stephen's been incredible. Another first responder, Shane Edwards. Shane is a partner at Squire. He provides CFO and transaction support services to private and publicly traded companies. Both Stephen and Shane have made themselves so available to answer questions, to create content, and we are grateful to have them with us this evening. Blake Weathers. Blake is a Utah native. He has spent 35 years at America First Credit Union, and the last decade dedicated specifically to serving small businesses. We invited Blake because America First was one of the first out of the gate to start receiving and processing applications. Given that we're focused specifically this evening on PPP or Paycheck Protection Program loans, we thought it'd be great to have a more traditional lender like Blake join us. Second, we've also got Brock Blake. Brock is the CEO and founder of Lendio, which is the largest online marketplace of business loans in the US. They believe access to capital should be simpler and quicker for all small business owners, and have built a great solution. They've facilitated over $2 billion in loans specifically to SMBs. Brock and Lendio is doing an amazing service, and they have been very efficiently processing PPP loans since the beginning of the program. We've also invited another local company that's done a great job of launching a program as an answer to small businesses for the PPP program. We've got Emily Smith. Emily is the Director of Strategic Partnerships at Divvy, the leader in spend and expense management. She focuses on partnerships with banks, financial institutions, and fintechs. She's leading Divvy's SBA PPP loan program. Their portal is currently processing loan requests totaling just over $1 billion. I think we've got a great panel. These people are experts. We have received your questions. We have prepared content, and we want to be narrow and deep over the next 90 minutes. We want to be helpful, and hopefully you'll find value in this. Thank you to the panelists for being here. Thank you to those of you who have tuned in, and I will now turn it over to Stephen to moderate a great conversation. Stephen.
Awesome. Thanks, Jeremy. So we realized that based on the questions that were getting submitted before this event, that we wanted to establish a baseline set of knowledge, and then we'll dive in with our experts. So if you're here for the Paycheck Protection Program, you're at the right place. Just a recap of this program. This is designed to fund small businesses up to $10 million at an amount of 2.5 times their average monthly payroll costs. And calculating average monthly payroll is not for the faint of hearted. It seems easier on the surface, but it includes your salary and wages, includes benefit costs, includes state and local employer taxes. And so it could be worse, but there is a lot of nuance to that. The cool thing about this loan is there's a forgiveness of component, that applicable expenses for 8 weeks after the loan can be forgiven. And these expenses are focused on payroll, rent, mortgage interest, and utilities. Now, there's a lot that goes into the forgiveness piece. And Jeremy and I discussed, we said, we're not going to dive into that deep this week. We'll probably look at doing that next week. This week is all about getting the money. A couple more things to understand about this loan. This loan is, it's a really good term. So whatever's not forgiven will be a 2-year, 1% fixed interest rate loan. This is being administered by other lenders. It's not being done by the SBA or Treasury because it's too big. And so that's why we have a collection of lenders here that'll talk about what their processes are. But essentially, they are acting as the arms and legs of the government to administer this loan. And this loan's incredible. For those who've done loans, you don't have to, there's no fees involved. There's no prepayment penalties. There's no collateral required. There's no personal guarantee. You're never going to see this. So the government is really trying to do its best to give capital to keep people employed and keep businesses alive. Final thing, eligibility. There's a lot of questions around eligibility. This is a very broad eligibility. It's for businesses based on the SBA 500 and less employees. There are some industry specific standards. It allows 501c3 nonprofits, some other nonprofit type organizations. And then this is the cool part. It also allows sole proprietorships, independent contractors, and self-employed individuals to apply for this program. I know from me at Ledger Gurus, I'm advising almost all of my customers and any small business that I talk to that if you've been impacted, you really need to go and get the PPP loan. So with that as a background, I want to take a step back and I want to start asking my panel of experts some questions. And the first one, especially because this is being run out of the Silicon Slopes organization, one of the biggest questions that we're seeing from tech companies are venture-backed companies eligible? And Emily, you've got a really great response. Why don't we start there and you give us your insights on eligibility for venture-backed companies?
Yeah, okay. So this question has come up quite a bit to our Divvy employees who have quickly turned into SBA PPP experts guiding them through our portal. So also I wanted to clarify, Divvy has partnered with a lender to participate in this. So the lender is participating and we are acting as an agent guiding them through our co-branded portal. So as our team has been answering this, and as far as we can research for venture-backed companies, yes, there is a way that you can get this loan. So if you have investors or owners who have more than 20% ownership in your company, then you would consider this. So if they have more than 20% voting ownership, you need to check and see if other companies that they also have 20% voting ownership in have over 500 in total between all of you. So if you have an investor who doesn't have 20% and between them and all of their portfolio companies, it would put you way over 500 employees, but they don't own more than 20% voting in your company, then you don't need to worry about this. But where we're also, there's a huge caveat of obviously this depends, there's a lot of nuances. So where we're recommending is involve your legal counsel, reach out directly to your VCs and your PE firms to come to an exact conclusion of whether this affiliation rule applies to you, and to restate that if the affiliation rule applies, then you're ineligible. If the affiliation rule does not apply to you, then you are eligible.
Awesome. Thanks, Emily. Now let's broaden the conversation. We want to talk about application process. This has been a big program. It's been tough getting it out of the gate, and our panelists, especially our lender panelists, we're proud to have them here because they've been doing a lot to support a broad reach of the community. And so I want to talk about and go through each one of you guys and talk a little bit about where and how somebody can apply for the loan. So Blake, we're gonna have to be very careful not to mix up Blake and Brock because they both share a common name. But Blake, AFCU, you guys were taking applications last Friday on the first day. Tell us a little bit about the process of going through the loan application with AFCU.
So we started that process last week. We actually were accepting them before then. We just didn't know all the parameters that the SBA was going to put out. So we were still accepting them, knowing we'd have to probably go back and do some changes. And we're doing that now. So we're taking care of those, but we've been going for a long time. It's been hard for us to try to figure out all the little nuances and changes that has come, because if you look at the law and the legislation as it was originally written, and now you see it as what it is now, they're almost two different things. So they've added a lot of nuances in there and things that you have to really work through. So we've been able to work through that, and they're really starting to ramp up the process now. We've got people in there working it and understand it really well. So, but it was kind of a process to get that done when we still didn't have clear direction on really what we were going to be doing.
Now, this has been a big issue that I've seen with other banks, but does a business or a self-employed individual, do they have to be a customer of AFCU to apply for the PPP through you guys?
Great question for us, because we have what our defined field of membership. So we have certain membership parameters that we have to federally regulated stay in. So we have to make sure they fit within our membership field. And so we do have some of that. And so we're not always going to be able to help everybody like we like, but if you live in and we have a pretty wide field of membership, if you live in that, we should be able to help you.
Awesome. Let me move over to Brock Blake. Brock, Lendio has been in the business of lending for or facilitating loans for many, many years now. Tell me a little bit about what it's like to go through Lendio to get a PPP loan. Oh, you're on mute, Brock.
Yep. Can you hear me now?
Yep.
Great. First of all, thanks for having me, and we're mindful of every single business owner out there and the high anxiety and stress they're going through right now with this COVID-19, and glad we can be here to chat through some of this stuff. You know, so as Emily mentioned, Lendio, we are not a lender. I just want to clarify that. We're a marketplace of business lenders on our platform. So we have about 350 different lending institutions on our platform that are participating in this program. And so what we have is the ability for a business owner to come and fill out an application on our site, and then we'll distribute that application to those lenders that are participating, that are funding loans. And so we have various levels of participation across the country. We have some non-bank SBA lenders that can handle a lot of volume and process quite a bit. We have some community banks that they say mercy after about 15 applications, and everything in between. We've now sent them with those 300 institutions a little over $3 billion of loans that they are in the process of funding or processing. There's quite a processing period, and so our goal at Lendio, prior to COVID-19, we talk all the time, our mission was fueling the American dream, helping business owners get the capital they need to achieve their American dream. We've tweaked that over the last week and a half. Right now, we are focused on saving the American dream and really trying to be the advocate for that business owner during these difficult times.
Awesome. Let me now move to Emily with Divvy. So you guys were not in the business of doing loans. You guys have done a really incredible corporate card that has some incredible features, and then came out of left field and launched a program to take PPP loans. Tell me about what Divvy is doing and how people can access the PPP loan through Divvy.
Right. And so it did come out of left field because, yeah, we were not normally in the business of SBA PPP loans. You know, most people, obviously, no one was doing PPP loans right before this. So, but what we realized is our customers and our non-customers alike, they need this loan right now more than they need to think about anything else. And, you know, what Divvy wanted to do was, you know, help our customers make sure that they could access it. And the best way we knew how to do that was to leverage our banking relationships, new lender relationships, and what we do really well of turning a lending experience into a streamlined, scalable digital experience. So that's why we jumped in to do it. And I'm really glad that we did, because the number of people that have been helped through us already really is of serious magnitude. So what is it like to get a PPP loan through Divvy? So we have partnered, as I mentioned earlier, with a bank named Cross River Bank. They're based in New Jersey. They're a web bank, and we picked them specifically because they are experienced in the tech sector. They're normally doing over 1 million loans a month, and they are fast, digital, resourceful, responsive. So between the two of us, there's a beautiful front-end application that after you go get a bunch of information from Divvy on our site, will redirect you to this portal. And our team is helping walk them through this application specifically with Cross River Bank. In this application, there are a bunch of tools to help you calculate your payroll correctly. Like you said, that's not for the faint of heart. I think we'll speak to that later today. And our team's there with you the whole time. I know that Lendio has a similar experience of someone guiding you through this whole time. It's, you know, it's not something that's fun to do by yourself, especially when you're scared, right? You know, this loan is really crucial to so many people who are looking for it, and we feel that, and we want to be there for them from the beginning all the way through submission. So after that, they are complete, and then the loan will be serviced specifically by CRB, and then we're prepared to be able to offload other things. I believe we had a conversation earlier today with Lendio for loans over $2 million. What's the beauty of all of this is everyone on this panel is connected in some way behind the scenes, really working so hard to make all of the pieces come to place for everyone in Utah and beyond who are trying to get these loans. You know, Divvy and Lendio working together, and Squire and Lender Guru is also working with Divvy. Like, it's just, everyone is working so hard to pull for all of you guys. And I really do believe that because we're doing that, that's why this is working.
A quick question for you, Emily. Does somebody have to be an existing Divvy customer to go through you guys to get the PPP loan?
Yeah, great question. No, you know, well, while this initially was born of, you know, how do we help our Divvy customers, we quickly believe that this process is so scalable now we immediately opened up to our non-customers just 2 hours after opening it to our customers. We're getting a lot of direct traffic of non-customers, where we actually, as of 2 days ago, also opened it to partners. Like I mentioned, Squire and Lender Gurus here, who are sending their customer portfolios and trusted clients through to use a co-branded Divvy page where they can send these clients somewhere that they trust to use an application that they know is usable and digital and quick and fast. So no, you do not need to be a Divvy client. We'd like you to become one. We hope that you would after having a wonderful experience with Divvy. And obviously that's a wonderful thing about this, is we really are getting to show how much we know and care. But no, we are welcoming everyone, and customer bases everywhere who need the help. We can help them.
Awesome. Shane, I want you and me, we're going to take a step back as the accountants or those running an accounting firm. We've got a big perspective across a number of financial institutions. I was originally advising my customers, go work with the bank that you've been working with historically. And some of those banks have just been, not even giving us a chance to lend through them. So what are you experiencing with your customers at Squire, and what are you recommending when it comes to going and getting the loan?
Well, thank you for the questions, Stephen, and it's a pleasure to be here. Originally, our advice was to stick with that lending organization for which you had a deposit account and a relationship manager, with the hope that that relationship manager could kind of help guide and prioritize through the process. But with all the challenges that have taken place and all that's been expected of the lenders, I think we've changed our advice a bit and are recommending that you move to that lender that can process the application most quickly. And the way that we do that is just through our customer base. We're finding out which lenders are processing the loans, and in some cases actually getting funding out to our client base.
Awesome. Brock, one of your peers from Lendio yesterday mentioned on a Silicon Slopes town hall, can you apply to multiple banks? If you don't have a good relationship anywhere and you just want to shotgun applications, is that legal?
Yeah, so the way we understand it and feel pretty confident in speaking to is there's a one PLP number. It's called a net. When a lender gets your application, they have to go then submit it to the SBA, and then they get an SBA confirmation number. And Blake Weathers could probably talk about this a little bit more specifically, but they call it a PLP number. And that PLP number basically means it's locked in with that lender, and that when someone else submits that application, it's going to get declined. And so that prevents you from getting multiple PLP loans from multiple different lenders. But to apply to multiple lenders, besides clogging up the system for all the lenders that are trying to process them, it doesn't hurt, or there's no negative kind of recourse for doing that.
And I think one of the reasons people are talking about shotgunning is because some lenders are just not being responsive at all. You put in an application, you don't hear anything, and every day is critical. So let's say I have shotgunned some applications. How do I know which lender has got my PLP?
Well, let me just take a step back on this question, if you don't mind.
Yeah, for sure.
I think what we're seeing, because we have 300 financial institutions, and we're seeing where they're focusing their time and how they're prioritizing their customers. Since there's only SBA licensed lenders are able to fund these loans, and while we think that's a lot of lenders, the reality is, compared to the demand, it's not enough. That means that all of these SBA licensed lenders are getting completely overwhelmed with volume that they can't handle. And because the volume is so high, they're having to prioritize who they're going to focus on to fund. Usually that means that, not in every case, but usually that means that they're going to prioritize maybe a lending customer or a customer that already has a loan. They'll prioritize a customer that already has their deposits with that bank, or some other priority. That means if you don't have a relationship with your bank, unfortunately right now, I think you're at a disadvantage. You're deprioritized, and which is not the way this program was intended. We put out some content today to the Treasury and SBA talking about, if I happen to bank with a bank, 10 years ago, and part of my consideration was not whether they're SBA licensed or not, but I have a relationship there. And then now 10 years later today, I can't get a loan because my bank isn't SBA licensed, and I can't go to another bank because I'm going to be deprioritized. I mean, it's a tough spot, but that's the reality of where we are. And our strong recommendation, and it's moving, it's just not moving fast enough, is that the Treasury needs to, or the SBA needs to approve additional lenders. They need to allow non-SBA licensed banks and credit unions because they're FDIC insured. And they also need to add legitimate and qualified fintech lenders who can process high volumes of smaller loans much more efficiently. And we hope to see that soon. But as of right now, there's challenges for a lot of business owners because of the reasons we've talked about.
Gotcha. So one of the questions that I get a lot is, how long will it take me to go through the application process? And how long thereafter will it take me to get my money? And I think it varies at different places. I want to go back to you, Shane, because you've got a broad experience. What are you seeing? How long is it taking to go through applications? And it's different with different banks. I'm seeing different processes, but what in general, what would you say the application process, how much time does it take?
Well, maybe I can start at the back end of the question, and that we have had very few clients that have actually been funded. So the ultimate answer is we're not sure how long it's going to take. There seems to be more responsiveness from smaller institutions than from the larger institutions, because I think the larger institutions have worked hard to get an electronic system in place that can then process applications very quickly. But I'd say from submission from an application to like signing on an actual note, it's 4, 5, 6 days.
So let me go back through my lenders and have this conversation. So Blake, you guys, like whether AFCU was one of the first ones to make loans available. How long from the time that an application is submitted to the time it's funded? Because you were saying before we went live that you guys are starting to fund these loans. What's that time frame?
So let me kind of caveat all this with what Brock said earlier. As you talk about, we only have a few lenders and the numbers that are coming in. So last Friday, we normally, just I'll give you an example, state of Utah probably does 6,000 SBA loans in a year. And probably by tomorrow, we'll have 6,000 apps in our queue. And so we're not the only one, and Brock can speak to that. There's just thousands of apps. So we are calling all our members, and we've started that yesterday, and we're ramping it up. But we funded yesterday, and we'll keep ramping up the funding, and we'll start rolling them out. You'll start to see that go. It's been a little slow because it took the SBA, and it's not their fault. I mean, they were handed legislation, said, go do this. And the Treasury Secretary gets on TV and says, yeah, you'll have the check by next Friday. You'll walk in and be able to get the funds. And so expectations were off the charts, and they just caused a lot of problems. But the program's starting to really start to get in place. And I believe by next week that most places will have a system in place that they can really start rolling these out. Because none of us want to sit here and hold on to this money or stop the process. So we're rolling it out now. We're just the speed picking up, the flywheel's moving, and I think we're really starting to get on top of it and catch up with all those apps we were getting.
Gotcha.
I think that's a good point. If you don't mind me jumping in on that, is that the first loan is always the hardest, and every lender in the country none of them have done a PPP loan. And so every single financial institution that we're working with is saying, okay, there's no standard docs. The SBA originally didn't say, here's the closing package, here's the agreement you use, and here's the whole thing. So every single financial institution across the country is creating a loan agreement and creating, what's the process of accepting this, and how do we do the calculations, and what do we have to document, and what's the KYC, and what's the KYB. And so the first loan takes the longest. Second one will be a little bit faster, and then like Blake said, it will pick up. And I realize there's anxiety from business owners because they're seeing numbers like, are those loans processed or were they funded? There's a lot of processed loans, very few funded loans right now, and it's just creating so much anxiety in the market.
Gotcha. Emily, you guys have some specific timelines that you're mentioning. From the time that your application has been submitted, what are the timelines that you guys are looking at with Divvy and your partner?
Yeah, great question. So like I said, we opened apps 7:30 a.m. on Tuesday. We anticipate that those loans will be approved and funded on Monday. So what we gave everyone as expectations was 3 to 5 days. And that puts us at 4 business days from putting the application in to funding being sent. And then we anticipate funding via ACH to take 1 to 2 days, depending on when they hit go before or after 5 p.m. Right. So Monday, we anticipate loans to be funded from Tuesday. So we haven't seen any funded yet. Like I said, there's very few funded. There's lots in the queue. There's lots being processed. And a lot of people are asking, we were talking about this, earlier before we went live, can we speak to how much of that 349 billion is gone, right? Brock, I really liked, your report back on that. Could you speak to, how much of the 349 is still there? Am I going to miss it, right? We hear that all the time.
Yeah, well, yesterday the SBA reported, and they're a little bit quieter about the numbers now than they were before. But they, as of yesterday afternoon, they reported about 100 billion that it was gone, and then Senator Marco Rubio was saying about 3 billion an hour today. So my estimates are somewhere around 130 to 150. It could be more than that.
And is
but
allocated or funded, right?
Yeah, see, most of those I think are processed. Processed meaning that they have an SBA confirmation number, and then there's a whole closing process that you have to spin up the documents, you have to get them out, get signatures, get them returned, and there's and then wire. So processed is very different than funded, and that's why you're not seeing a lot of. There are deals that are being funded, but not a lot of volume. Even the 100 billion or 150 billion, as of yesterday, that number was 400,000 business owners in the US, which also feels like, wow, that's a huge number. But realize that there are 30 million small businesses in the United States. So, 400,000 as of yesterday was 1.3% of all businesses. So 99% of businesses haven't even been processed yet, and for sure haven't been funded. And so most people are thinking, I'm on the outside looking in, everyone else has money, and that's not the case.
Right. That's what I wanted to make sure was communicated here to everyone listening is no, you haven't missed out, and no, everyone doesn't have money, and no, it's not gonna be too late if you don't get your money till next week. You're in good hands if you're getting your money next week. So that's
get on the process now, though. I think,
yeah,
we can all agree that, if you're getting blocked at your current bank or lender, then you need to go.
You do.
Plan B, right? Start working.
You absolutely do.
Yeah.
Starting now, you do. You need
So I want to shift
around.
the conversation to getting more into the details of the process of the application. I actually want to show real quick, this is the SBA form. This is not the only thing that you'll have to produce, but this is the form that you have, that most lenders are having you fill out. And if you've been through an SBA loan application, it's not the worst thing in the world. You're gonna have to put some business information in. I'm gonna come back to this part. This is where the hard stuff is. You're gonna have to calculate your average monthly payroll and then do some math. So hopefully, basic algebra. You're gonna have to put in an employee number, and then you're gonna have to specify a purpose of the loan. The rest of the application is around ownership and some pretty simple questions that I would assume most business owners could answer without needing a lawyer or accountant. And then you're gonna say, you know, certify a bunch of things. My favorite one is current economic uncertainty makes this loan request necessary. I think almost any business could say yes to that, even if the sales are good. And then you sign it. So the real devil that I've seen, and you know, doing outsourced accounting services, has been this part right here. This line right here. What's your average monthly payroll, and what's your number of employees? So I want to spend some time discussing some of the calculations that go into this application. And then I also want to talk about the documentation that somebody's going to have to produce along with this application around that application. So let's kind of hit some questions around the payroll calculation. A big one, and Shane, I'd like to go back to you. We'll kind of be the agnostic accountants, and then if any of our lenders want to provide some additional insight, what time frame do you use to calculate average monthly payroll, Shane?
Well, we're recommending for the majority of our clients that they use the calendar year 2019. One of the reasons for that is they have their 941s, W-8s, and their 940s already available to provide support for those numbers. It's also a closed year. They've had a chance to vet the numbers and get comfortable with them. However, you are allowed to use a year-to-date number. But again, the supporting documentation was not going to be as readily available. There's also some issues about if you're using periods in certain periods in 2020, there's the opportunity where you will probably have to deduct from the calculation certain payroll taxes that are being withheld from the employee. So short answer, we're recommending 12 months ended December 31st, 2019, and using your gross payroll number with employees that are over 100,000, you back those out and then include the benefits on top of that.
Gotcha. Now, any of my lenders, do you guys want to add any clarifications or insights on top of what Shane just talked about?
I'll jump in here. I think that was a really great explanation. Thank you so much, Shane. This is definitely one of the questions that our Divvy team is just spending the most time on this calculation, using calculators, using a spreadsheet that CRB has provided within our application. It actually does help walk you through it a lot. It guides you through, pull from your 941 this number, like Shane said, and then back out these numbers. And one of the ones that it reminds you to back out in case you were going to include it was any contractors or anybody that wasn't a W-2, right? You need to really make sure that you're not including something like that. I did like that you obviously mentioned benefits and other things like that. So the reason why this is important to get to payroll is obviously because you're going to use that number that you get to at the bottom of payroll to then apply the multiple 2.5 to apply for your loan request. And you don't want to request the wrong amount of loan. And that's why, if you didn't already understand, that's why it's so important that why we're emphasizing so heavily that you do calculate that payroll number correctly.
Awesome.
I'd like to add something to that, what she said, because part of this program, I think, is that we as the lender, we've got to make sure we get you the right amount so we can then make sure you can maximize your forgiveness.
Right.
And so, going through that and trying to train people and get them all up to speed on that, it's also one of those things that happens. But, that's what we want to do is make sure at the end of this, you have the chance to get the maximum amount of forgiveness that's possible to you, but that number has to be correct.
And Emily, you hit on the independent contractor question. That is tomorrow. Independent contractors and self-employeds will be officially, those applications can start being processed. How does that differ? Maybe let's stay with you, Blake Weathers. How does payroll calculation differ for a self-employed or independent contractor?
So we're going to look at the W-2 and the 1099s for them. and see if we can't use that. We'll have a conversation. We're going to try to have a conversation with every one of the borrowers to make sure they understand the process, the forgiveness rules, and all of those things that go along with it. So yeah, the 1099 will be great. W-2 for those self-employed, sole proprietorships, that's what we're looking to use. And then if they don't have some of that, we can use bank records, we can get some other documents, but we've got to have a pretty clear record again. So the forgiveness can happen at the end. We want to be accurate on the front.
Great. Brock, Blake, do you have any additional insights when it comes to monthly payroll calculation from a Lendio perspective?
I think they've about covered it.
Awesome.
Be redundant. So
there's a couple of questions that I've been getting from an accounting perspective, and Shane, I'd love to hear your opinion. I get the question, if I have an LLC with an S Corp, do my owner distributions count towards that monthly payroll calculation? Our answer has been no, but I'd like to see, do you agree or disagree with that, Shane?
Well, you're more definitive. Our answer is we don't know. You're probably more correct than a wishy-washy answer like that. But we're, as in fact, as we were talking, I keep expecting that on the treasury.gov site to get some improved clarification tonight. If they hold true to form, the clarifications will come at the last minute, and then the poor lending institutions will have to adjust. But for example, in addition to the issue that you brought up, is will the calculation be based on the gross number of, say, the 1099s or distributions that they received, or will it be more of a Schedule C calculation where it's a net number, right? Where you take the gross revenues that the company received, backed out expenses, and then the maximum amount they're able to draw is on the net. Currently, we don't have all of the specific answers to those questions, but certainly we're hopeful the clarification comes soon.
And I think you made a good point. I was probably too definitive. Part of the reason we've said no is typically distributions aren't done through payroll, but to your point, there's been no clarification on yes or no. So maybe let me bounce back to some of my lenders when that question comes up to you guys. Do owner distributions, do you guys consider those part of payroll? Maybe we'll start with Blake. I saw you, Blake Weathers, you were nodding your head back and forth a little bit.
If it's not a payroll expense, it's going to be hard to do that. That one's a hard to answer one because every business is different. And so you kind of have to take a look at it. Those distribution ones it's kind of hard. We're struggling through some of those as we get them. And I'm hoping for more guidance. That's really what we're hoping for, is to get a little bit more guidance. Because again, if we're not accurate, they could end up owing money that they really shouldn't have to pay. So we got to be real careful there and hopefully get a little more guidance on it. Maybe Emily or Brock know a little bit better.
Yeah, Brock, what are you guys doing at Lendio when somebody says, hey, it wasn't on my 941, but I took this distribution out of my business. Do you guys consider that payroll income in your application process?
well, I mean, two things. One is there's not a lot of guidance, and the Treasury's also kind of said to the lenders that they're going to hold them harmless if they somehow screw it up. That's what they say, but everyone's a little bit hesitant that all of a sudden the guarantee won't be there when you go to collect on it later. So right now it's basically a judgment call with the lender. Can the borrower document that? Is there good documentation of that income? And does it fall underneath the $100,000 threshold? Obviously, because it can only go up to $100,000. So if there's good documentation that falls underneath the $100,000 threshold, then lenders, some lenders are including that as part of their calculation, but each one's treating it differently because there's not very specific guidance on it. And so it's one of those that it depends.
Yeah. And there's a lot of that. There's a lot of there's still a lot of gray areas in this program because it literally got passed 2 weeks ago and went live a week ago, or tomorrow, right? So we're talking about a 2-week-old program.
Stephen, just
Yeah.
one.
Go ahead.
Oh, sorry, Brock. Stephen, just one clarifying item. One thing we are telling our clients, if they own a business, and let's say that they did have some W-2 income, but then on top of that, they received distributions, that in the application for their business entity, they should most likely only include the business income. But there may be an opportunity for them potentially to apply separately as a individual and record that dividend income along with other 1099 income that they might have received.
Thanks, Shane. That's pretty cool. That's why you got to work with accountants, right? Because they know the little workarounds, right? The other question that on that form that's gonna create some well, you guys brought up some points. I want to talk about the $100,000 threshold. I think Brock, you mentioned that. Let's dive into that. There's a limit to how much payroll per employee that you can claim. Brock, why don't you brought it up? Why don't you kind of describe the $100,000 threshold?
Yeah, so for each employee, you can only count up to $100,000 of their income, and you're taking the average monthly payroll. So basically, the max you can take on any individual is basically 8333, and you wouldn't be able to include anything above that in the 2.5 calculation. One
of the questions I've seen around that, and I'd love to hear if there's differing opinions on this, is you've got your compensation, but then you have your benefits costs, which the Treasury has specifically said can be included in calculating your monthly average payroll costs. Do you take people's payroll plus benefits, and where does the cap apply? Does it apply just to the payroll compensation, or does it apply to payroll and benefits?
I believe where our calculator has this line has wages, salary and wages separately from benefits or leave or anything else like that. And then it has you add benefits. I'm reading it right now. So salary, wages, commissions, or other similar compensation, plus cash tips or equivalent, plus paid medical sick leave, plus group health insurance, plus retirement benefits, plus state and local taxes on employee compensation, less portions of wages in excess of $100,000 a year, less payments to independent contractors if you had included those, and less payments to sole proprietors if you had included those. Does that clarify?
I think so.
That question.
Just to recap, and I see a lot of nodding heads. You calculate the wages or the salary, and you cap that at 100,000, and then you can add in the other things on top of that. Does anybody disagree with that analysis of how you're calculating that? Okay.
It's my understanding that's correct.
That's all right now, as of today. Now that could change tomorrow, right? The Treasury guidance is coming out every day, but right now from the panel, we're all saying yes, that's how we're calculating it. The other one is tax, is employer's tax. There was a provision of the Paycheck Protection Program that mentioned you could include the cost of state and local tax, but not federal. So
on employee compensation, yes.
On employee compensation. So if you are a business, you have, as an employer, you have to pay taxes on top of that employee. Shane, when you guys are doing this calculation, are you guys going in and looking at the employer's state taxes and including that in the monthly average payroll costs?
Yes, we are. And it's, again, because most of our clients are using 2019, it is allowed. I think there was a clarification that came out from the Treasury that the withholdings, just to make it clear, the withholdings from employees are allowed to be included in the calculation. However, you should not be including, for example, the employer's FICA match as part of that calculation.
And for those that aren't steeped in the evils of payroll, FICA is your federal, that's your Medicare, your Social Security, your federal income tax, all the federal pieces that the employee pays, the employer has to pay as well. And that is not being allowed to calculate in terms of the monthly average payroll costs. Is that correct, Shane? Just recapping what you just said.
That's my understanding, correct?
Okay. One of the things, there's a question from our moderators. What about benefit stuff? What about 401ks? Can I calculate the employer's portion of the 401k as an additional cost on top of the 100,000? So Shane, why don't we start with you? So we'll just kind of keep going where we are. If I'm paying a 401k match, can I calculate that in addition to my wage costs?
Yes.
Okay. Any disagreement from the panelists? Okay, I'm getting the thumbs up that we're all aligned.
Just one thing to consider on benefits: if the benefit is paid on behalf of the employee, it's includable. But if they're paid directly, it should be part of their the payroll calculation. So, for example, if you pay your employee for their vacation time, you cannot double count. You can't double count that as a benefit and as part of the payroll itself.
Awesome. I want to go back to one other magic number on this application. So let me bring up you guys see my form again? The number of employees. Why, there's not a lot of detail on why this is here. And this kind of leads us into the forgiveness portion of it. But how do I calculate the number of employees and why does it matter? Let's go back, Shane, let's start with you. How do I calculate that number of employees and why does it matter from your perspective?
The way that you calculate it is, and I'm going to have to look at my paper here because I keep forgetting the dates. There's two dates that you can use. The borrower can elect to use either, and I'll just read here, the average number of full-time equivalents employed from January 1st, 2020 to February 29th, 2020. It's number one. Or the average number of full-time equivalents, and we'll talk about full-time equivalents in a second, but full-time equivalents employed from February 15th, 2019 to June 30th, 2019. Most of our clients are choosing to use the full-time equivalents employed from February 15th, 2019 to June 30th, 2019. The reason that it's important is that becomes the baseline for your forgiveness. So to the extent that you drop below that, we're not going to talk about forgiveness today, but to the extent that you drop below that full-time equivalent calculation during the subsequent 8-week period from funding, you lose a certain portion of the forgiveness of the debt.
Yeah, and I think that's a really important point, because people are wondering why the number of employees is even on the application, because it's not relevant to your loan amount right now. And it is because it is our understanding that it's because that's going to guide the loan forgiveness. And if the number of employees decreases from that, then your loan forgiveness you won't be able to get your maximum loan forgiveness. So that's a critical number there that you pointed out.
Shane, I want to go back to you. You said full-time equivalents. In that calculation, I think this is where people get, confused. I have part-time employees. Do I count each one of them as a full employee, or do I do a divide by 40 hours worked? How do I calculate the number of employees if I have part-time staff?
Well, we're instructing our clients to use a 2,080 hour base as the full-time as what a full-time employee would work.
Have you seen, this is one where I've been personally like looking for guidance. I haven't seen any specific guidance from Treasury on that calculation. Have you seen anything specific that goes into that?
I have not. That's
Okay.
just a decision that we have made so we can keep our clients moving forward.
Blake Weathers, you look like you had something to say. What is your perspective on the calculation of employees?
So it's a full-time employee, but if you have two 20-hour employees, there's a full-time equivalent to that one. So you'd have one more full-time equivalent instead of two employees, you'd have one.
Gotcha. So you guys are recommending use full-time equivalents based on hours worked.
Yes.
But just to be clear here, this is one of our gray areas that and there's a lot of gray areas through this program. This is one of those gray areas. And to make the earlier point, I think that Shane made, or maybe it was Brock, I can't remember. This number is going to be used with the forgiveness, which we're going to get into next week. So you want to use a good number that's defensible, but you're also going to you also have to know you're going to be measured against that number when it comes time to produce evidence of amounts that should be forgiven. So, okay.
Stephen, just one comment on that. We're also instructing our clients that if their particular lender is feeling better about a different date period than the ones that I've mentioned, and there have been difference. Some lenders are asking for different dates to calculate that full-time equivalent. Certainly have a dialogue with the lender, and if it helps your cause, go with the better number, and then certainly the better number would be the lower number.
Yeah. And that's a good point. Like there are, you and I are seeing a lot of variance across lenders. And so there's the program, but in the gray areas, lenders are trying to interpret it to their best ability. And so we're trying to navigate, like, I need to get a loan, right? So I need to play by the lender's interpretation and not just the program and to get this thing through, right? Brock, you had a comment, it looks like.
Well, I was just going to say that right now, the most important thing is find the lender that is funding loans. When the market is actually efficient and all the lenders are participating, and now it puts the choice back into the business owner's hands, then you can kind of navigate through, okay, well, this lender's calculating it this way and that lender's calculating it this other way. And, you might be able to choose. Unfortunately, I don't think we're in that position quite yet. Hopefully in a few weeks we will be when this the mad rush kind of slows down a little.
Yeah. So there's an old CFO joke, right? What should the number be? The CFO says, well, what do you want it to be, right? So the reality is you got to work within the constraints of the program and the lender, but don't get too hung up on this, right? Because we want to get money. You got to find the people that are funding, get through it, work with the lender, and make sure that will that they can. Most of you guys are helping. Like, so here's one of my next questions. There's a lot of detailed questions. If somebody's going through the process, how do you help somebody with the application? Let me start with you, Emily. So somebody's going through your application process and they have a question. What are you guys doing to help borrowers with their questions?
Yeah, I'm glad that you asked this. So right now on Divvy's website, we have compiled a lot of resources that we've then digested and simplified down, and some instructions from our lender specifically, our main lender specifically, as to what other documentation we think that they should have ready for when they open the application, numbers that they're going to need to refer to, et cetera. So they don't open the application, get overwhelmed and realize they don't know where any of this stuff is. As we've prepared our customers and non-customers alike who've called in, who've emailed in, who are asking, and this is our sales team, our risk team, our customer success team, and our customer service team are all on this right now. It's really been a whole effort. They are helping them compile their documents. They have them open the digital application, which is similar to that one you showed on the screen, but it's been broken up into chunk step-by-step. I believe Lendio is doing something similar and makes it more digestible for the applicant. And it informs you where to insert what. So we have customers who and non-customers who we helped compile their information, and then the application went live. And when they clicked it, it took them 15 minutes to go through the whole thing because they had already pre-calculated everything that they needed. So how are we helping at Divvy is, we invite them on a Zoom call. We have them share our screen. They open the application in front of them and we guide them through, and they click through. The customer is the one filling out the application themselves, to be clear. They are the one handling their own personal information, but we can be there with them, social distanced, like, on Zoom, helping them, and they're like, oh, what do I put here? And it's like, okay, pull up your 941. This is what we're doing on this spreadsheet that I'd asked you to work on and re-upload. And our lender CRB specifically has a section at the end where they ask our customers and non-customers to upload some documents. And this is because every lender has their own due diligence process and their own KYC and their own everything that they're doing to make sure that they're funding loans that they feel good about, right? They're ultimately going to be on the hook for this if they fund one that they shouldn't have. And so I don't know if we were going to get into that, but we have them upload those documents there so that the bank can check against all of the answers that they've put in as well, so that it's a really complete loan package when they've hit submit. That we're helping them the whole way through.
Brock, what are you guys doing at Lendio? When somebody comes to Lendio and they need help, how is Lendio helping borrowers?
Yeah, we talk about it all the time at Lendio. It's a high-tech, high-touch customer experience. So we want to be able to allow that business owner to have an easy experience online where we're guiding them through the process and identifying which documents they need and answering questions. And then we have what we call funding manager that's assigned to each borrower that they can reach out to via text, chat, email, phone, whatever it might be. We also have a team of content managers that are pumping out. Basically, that we take the top 5 questions that rose to the top every single day, and then we pump out 5 new blog posts that day of okay, this is exactly what your application should look like, and here's how you calculate this, and here's how you calculate that. So we're just trying to feed as much information as we possibly can to these business owners that are trying to go through this process, and then provide guidance and someone there to answer the questions along the way.
Awesome. Blake Weathers, what AFCU, I go and I apply there. How are you guys helping customers get through this process?
So because we didn't know what kind of application was going to be filled out from them at the beginning, and it changed, I think, 2 or 3 times. When this first started, we have 12 people in our SBA department, and we've now grown that out to about 100 that we've trained at least to some portion. And then we hope that in the next couple of days we'll have more. We're calling every member and going through that application again, because it changed from the first one to the second and third one, and there's a lot of disinformation out there. So we're out there calling them and going over it with them, and then making sure they understand the program. We'll actually, not a Zoom, but we'll actually work through it with a DocuSign document and make sure they have the right numbers, and they can ask questions if they have anything that's concerning them. So at one time on that Friday, we were taking, we take maybe 20 or 30 apps a day, maybe a little bit more than that, but we were taking 3. Incoming was 3 a minute.
Wow, that's incredible.
So my staff of 12 was like, help us. So we've rolled that out. It's just, like I said, it's a little bit of a process, but once it starts rolling, we'll be in really good shape. And we are now. It's just getting better every day.
Shane, you guys are doing some really interesting things as one of the largest accounting firms here in Utah. Why don't you tell just briefly what you guys are doing to help the community around these programs?
So we've created a site called squirecares.com that will allow you to click a link, fill out some personal information, identify the types of questions where you need help. For example, in the last few days, the focus has gone from business applicants to independent contractors needing assistance. So anybody can go to squirecares.com, click the link, fill in the information, and you'll be contacted within 24 hours with someone that can help you through the application process. Client or not, makes no difference to us.
Awesome. And we're one of the smallest, Ledger Gurus is one of the smallest on this panel, but we're trying to do the same thing. We are putting out blogs and videos and tools, FAQs to try and answer questions as well. We're doing that off of our portal, ledgergurus.com/COVID-19. I feel, very passionately, and I think this whole group does, that how do we help the community stay alive? We have to help small business stay alive. One last question, then I don't want to just, I want to take questions from the audience. What documentation do we need do borrowers need to prepare to have? Let's go back to you, Shane. What documentation are you advising people to assemble?
940, 941, W8, I think are probably the most important documents, in addition to the actual payroll reports that reconcile to those documents. Everybody needs to be aware, though, that, and again, I'm talking about the business client now, not so much the independent contractor, but you do need to provide a reconciliation for the lender from our perspective, because there are certain numbers in the 941 reports, for example, that are deducted or adjusted that won't tie to your gross payroll calculation. So to speed up the process when working with the lender, prepare a nice reconciliation. On the 940 document, there is one, I think it's box 3, where if the 940 is done correctly, it should tie to your gross pay.
Gotcha. Brock, what documents, why don't you build off what Shane said, or what additional documents that he mentioned are you guys asking for?
Well, similar to that, I mean, front and back of driver's license, the tax filings. If we're looking at the payroll reports, we usually try and add a bank statements to them. Like if it's an official PDF from their payroll provider, that's one thing. But if it's like some sort of spreadsheet or something like that, that's not going to be good enough. You're gonna have to match that up to bank statements. And so it's just trying to gather all the in every possible way, third-party verification of the data that they're providing to document the numbers that they're proposing.
Okay, Blake Weathers, what would you add?
I don't know if I'd really add anything. There's some businesses we might just have to call back again after we get the documentation and say, hey, we need to go through this with you and just give us some answers to some questions and figure that out. Again, we want to be right, because if we can't get that calculation right, or it's off and they get too much money, that might be over what they can be forgiven. So we got to have conversations with those businesses where it might get difficult, but the documents they're asking for are the same we would ask for.
Take us home, Emily. What would you add to what the others have said around documentation?
Yeah, I'm glad you asked. So our lender, as I mentioned earlier, has a very specific list of what they want uploaded as the last step of their digital application. So it is similar payroll records, as have already been mentioned here, the 941s, 940s. Optional tax returns, if they have those, that's great. Copies of the driver's license of the owners. This is for KYC for the bank, because in this case, obviously this bank is underwriting and issuing these loans to people who were not normally their customers. If you are working with a bank who you have been a customer of before, then KYC would be done. Voided checks, so they know where it's going to be deposited. 6 months of bank statements, also like Brock mentioned, just additional verification for the bank. And then as part of our application, there's actually a download of a spreadsheet worksheet where they calculate the payroll, and then they re-upload that as well. But all of this is done on the very last page very concisely, and you can read it on Divvy's website, so you can prepare it in advance so that it's super streamlined.
Gotcha. All right, I think at this point, I'd like to, Jeremy and John, who are moderating, watching questions, what questions have we not answered yet? Feed them to us. Sorry, I probably should have given you a warning about that. Maybe just give us some questions that we haven't addressed yet.
Hey, Stephen, we've got a list of them. Paulina or John, do you want to give them to them now, or do you want to do it via the chat function? Or
John just gave me a really great one. Yeah, so send it to the chat function. We'll just hit them up one at a time. Here's a good question. What are the likely mistakes that people are going to make during this process? That's a really, really great question. What are the things you're seeing people do to try and avoid? Let's see, Blake, you guys took them started taking applications really early. What are the issues that you guys are seeing at AFCU?
Well, I think early on when there was a lot of confusion about what it was, the payroll amount that they were asking for, some of them just put in a number because they didn't quite understand it. And then as it's come out, they changed it. And so there's been a lot of confusion about that payroll number and how to calculate it. Still is. You know, some of these business owners are sometimes so busy selling and getting their product out, they don't have a lot of time to think about the taxes and all of this stuff. They know they're there, but they don't have to go through them with any detail because their focus is on growing their business. So that's probably been the biggest confusion, and just understanding the whole process and the time that it takes, and the things that we're going through and they're going through, and the anxiety that builds up because you hear things. And that's the hardest part, is just trying to get their answers to their questions and do it timely and get the right information in there. So again, we do it right and they get the best benefit from it.
Brock, you guys are as a marketplace, you're probably dealing with a lot of applications. What are you seeing as common issues when people apply for this program?
Yeah, we have over 100,000 business owners that have completed applications on our site. So it's a lot of volume. And I think the thing that is the most concerning is just that they're not complete around, you know, we're quite specific around what documentation is needed, and they don't have that. And the challenge with that is when you submit an application to a bank and it's not complete and thorough and they're going through it, now they have to kick it back. Now you're going to be starting at the back of the line basically again. And so I think being as we've talked a lot of today about, you know, what that application looks like. We have a lot of content on our website, but in any scenario, if I'm the business owner, I would try and over document. I think we from ID verification, you know, front and back of driver's license, from payroll reports, from bank statements, from tax returns. I mean, I would put it all out there so there's no question, and there's and around, you know, that you've got it documented and verified, and if that's the case, then the lender is going to feel a lot more confident around that file to be able to say yes and move it through, because they're not taking risk on oh, this file's not that documented. So
Emily, anything to add? What are the issues you guys are running into as applications are pouring in?
Yeah, so I'm looking at our, hotline channel right now with all of our Divi team, compiling our answers and checking them against our other research, and a lot of questions around backing out those contractors, not as payroll. That EIDL loan, outstanding EIDL, economic injury disaster loan, if you got one of those, there, read up on that. That does need to go after your 2.5 multiple. You need to add it back in after that for your loan total. There is confusion around if you submit an application once and then you realize you want to update it, you need to go to your individual lender to figure that out. Or, can you resubmit it to your lender again, and then they'll obviously only submit one to E-Tran. So, having everything you can before you hit go, but then not waiting too long, and making sure that you have clearly stated with your lender how you would edit it after the fact. So you don't want to, you can't wait forever to submit it, right? I think the others really answered a lot of the other questions going on in here, but really a lot is that around that, specifically that payroll calculation and employee calculation. So hopefully we answered that earlier.
Gotcha. Shane, any things you're seeing, anything to add to what's already been discussed here?
No, the head count seems to be still something full-time equivalent, not full-time equivalent. We spoke of that, what periods you use. So just make sure that you look at the dates and apply a full-time equivalent to those employees to get the proper head count in. And then again, make sure that coincides with the lender's understanding of the calculation.
Okay, gotcha. Here's another question. This is an interesting one. How does the PPP loan, and I'm not sure if we have the right audience here, so anybody that feels like they have the answer, raise your hand. How does the PPP loan conflict with unemployment eligibility?
Well,
yeah, go ahead.
it's my understanding that if if your employees, right, are on unemployment, let me put it this way, if they're being paid via your company because you applied for and received a PPP loan, they are not eligible for unemployment because they're being paid.
And I think this is a really important point to emphasize, that the purpose of this program, it's the Paycheck Protection Program. It's not the, here, owner, go out and buy some new property, plant, and equipment loan, right? This is, they want you to use this money. We'll get into this when we talk about forgiveness. They want you to use this money to keep people on staff. In fact, the guidance that's been given is up to 75% of the forgivable amount needs to go towards payroll. So you need to keep people on staff. This is going to make it a lot easier for everybody else. If our staff is working instead of going to unemployment, you just got 8 weeks of funding to keep your staff on staff. Another question, if I haven't heard back from my institution I applied to, should I go somewhere else?
I'd like to answer that you already did apply, or that you were trying to apply to.
Let's say
If you
somebody's
have not-
applied and it said application received. They haven't heard boo for a day or two.
Yeah. My recommendation, and Brock spoke to this a little bit earlier. I mean, if you have it in and you really can't hear back, I mean, like we said, they do need to pay you within, you do need to be funded within 10 days. So they will get back to you by then. Most institutions are funding in usually no less than 5 days. So most likely you're normally fine. But like Brock said, the first one that gets put through to E-Tran and the number is saved is the one that's going to count. So Brock, did you want to change that answer in any way?
Nope.
Okay.
Yeah, I think the confusion for our clients is when have they submitted an application? Because during the early phases of this, I think lenders were just gathering information. And I think it confused at least many of our clients and many in the community is, well, have I applied or haven't I applied? Just because I sent them a sample of information, and it probably makes sense to ask the lender if you really have applied or haven't applied and received the unique number that Brock and Emily were referring to.
Excellent. Here's a good one for me and you, Shane. And this is a tough question. Should we be looking at hiring consultants to help us through the process? You know, one of the things is, like, I'm a small business too, right? I can't give unlimited free services. How are you know, what if somebody asks you that question, what's your answer, Shane?
It's clear that the lenders cannot carry this entire load and process the loans. And I think the better prepared you are when you, clearly from our discussion, the better prepared you are when you approach the lender, the faster you're going to get your money. Our approach at Squire has been, again, if someone calls and they just need some help and some guidance to walk them through the process and review certain calculations, we typically haven't been charging for that. If it's a deep dive major project, we talk to them about it and see if it's something that they want to do or if they want us to jump in. But what we try to do with those people that just contact us through our website is try to just help them without charge by guiding them and having them do some of the heavy lifting.
Yeah, and I love what Lendio and Divvy and AFCU, what you guys are doing to provide information around your process. There's a lot of information being produced. And so hopefully you can get some of those answers without having to engage us. I mean, the hard thing, and Shane, I think you probably feel this too, it's hard for us to go out and be like, hey, I know you're not making any money, so consult with me and I'm going to charge a big bill to try and get money. And it puts us in a really sticky situation to try and help people get money for something where they don't have the money. So another question. What is, and this is kind of going along the line of, well, I think we've kind of already answered this, so I'm going to just reiterate what was said earlier. Is there a risk to applying to multiple banks? And I think the answer has been said over and over, not necessarily, but you can only get the loan once. It says it very clearly, you can only get the loan once. So if for some reason two lenders and this shouldn't happen based on what Brock was saying, and what you shouldn't be getting the loan twice. But if for some crazy reason you do, then you need to stop. You need to talk to the lender and say, I'm not, no go, because it will catch up to you eventually. Most likely, the way the system works, and Brock, maybe you could clarify on this, is what's the likelihood that somebody could get 2 loans if they applied at 2 places?
Well, for the same business, it's not likely because you're submitting all the information through E-Tran, the SBA portal, and so it will validate that, make sure it's not a duplicate, give back a PLP number or a confirmation number. Now, that being said, if I'm a serial entrepreneur and I have 4 or 5 entities that that I own or I have ownership in, each one of those are separate businesses, and each one of those can apply on their own and be approved on their own. It's just not for the same EIN. You can't get 2 loans for the same company.
Awesome. Okay, here's a really great question around ownership. What defines ownership? If you have 3 owners who own over 20%, but only one of those is allowed to make decisions, what defines ownership as part of this application?
Over 20%.
Over 20%, and is that decision making? Is that like as an equity percentage, on an equity basis, I own 20% of the company?
Yes.
Yeah, anything over 20% needs to be a signer on the documents per the SBA guideline.
20% of equity, not because you get into voting rights, which can sometimes be structured differently, but 20% of equity is what you should go off of, or equity is what you should determine for the ownership.
Blake might be able to say something differently, but I'm like 99% sure it's based off of equity ownership.
Yeah.
It's equity ownership.
Equity ownership. Okay.
The only time I've seen voting rights come up is in that affiliation rule. So it might only be an issue there, but we could double check that.
Gotcha. Here's an interesting one. Well, I'll get some easy ones. Can sole proprietors apply for the PPP? Yes, go do it. Another question. If the money has to be spent in 8 weeks, why is it calculating 2.5 months for the loan amount? I'll give you my theory because I haven't seen good guidance here, but you're not able to, and this is probably a good bridge into next week. Hopefully there'll be additional clarification, but you're not able to include federal tax as part of your loan calculation. So one of the theories that I have is if I need to cover all of my staff, I need to have money to pay that tax as well. So that extra 0.5 is going to help me there. Any other thoughts on why it's a 2.5 calculation when only 8 weeks is forgivable?
Well, you also can spend it on, only 75% needs to be spent on payroll, right? You can spend it on all of the other boxes that it lets you spend it on.
Mortgage interest,
utilities in some cases, yep. And loan interest, yep.
Awesome. Here's a very specific question. Somebody said they switched to an S Corp in the middle of the year, so they don't have a lot of historical information on payroll. Can they just can they just use partial year numbers to calculate the average monthly payroll? This is a hard one.
This may be the same answer as someone who opened their business halfway through the year. What do you guys say?
We're or for our clients that open during the year or don't have a full year, you just use what you have.
But in this case where they just switched entities partway through the year, that is a tricky one. Do they have no record of payroll before that?
Yeah, and I missed that part, Stephen, in your explanation. So
yeah, saying that they switched they had a mid-year switch, and I think so let's say they switched to an S Corp in the middle of the year. I'll look at the question, and so they don't have good historical payroll information. Maybe they were operating as one structure and then they moved to another and started paying themselves payroll.
Yeah.
Do I use just the portion of the year that I was doing the payroll, or do I use the full years, or do I use that information across a full 12 months to calculate?
Well, I mean, I saw a question today come through that said, I've been paying cash for my payroll. What do I do? And it's like, you know what, you don't have a record if you don't have a record, then you're not going to be able to put it down or back it up, right? So that might be in this case where, if you can't, and maybe you were paying even more for payroll before that or something, but it's not going to matter because you don't have a way to back into it.
Yeah, so that's going to take a little work to kind of figure out. You might have to look at this year's numbers, match them up to the last 6 months. There's going to be some calculations that have to go on, some thought behind it, just trying to get a number that makes sense. If you had 10 employees now and 6 then, it'll be different. I mean, there's lots of things that you can do. It's just, you might have to back into it a little bit.
And I'd say whatever you can document. That's going to be the key here, is that you have to be able to document the payroll. And so if you have good documentation for 12 months, then you're going to want to use 12 months. But if you don't, and you only have 8 months, then use that. But the guidance is going to be based off of the documentation versus, numbers that come from, somewhere else.
Yeah, agreed.
And then Stephen, in this example, I believe the assumption is the legal entity didn't change. They just went from one status to another. I think if there's a legal entity change, you probably have 2 separate applications, but the lenders could confirm that. Let me restate. So in other words, for half the year, they operated as an LLC, and then they kind of closed that legal entity and then started operations in a separate S Corp. I think we're looking at 2 separate entities. Brock, can you?
I think so as well.
Okay. So here's a really interesting example. I had this question through our firm. Somebody said they're a short-term property rental owner. I'm assuming they're managing those properties as a business. I'm getting crushed with cancellations. I hire a lot of people, but no employees. My response has been, there are situations where the PPP may not be the best fit. And this is an example. If you've employed primarily 1099s, you may be able to get some money, but how forgivable is that money going to be? If you didn't have a lot of payroll and you don't have the ability to have a lot of payroll, it's going to be a struggle, right? Anybody care to disagree or agree with what I just said around companies that are essentially no payroll companies?
I mean, this is the payroll protection program specifically meant and designed to protect payrolls from being halted and to keep jobs going. So if you're finding that you're in that situation and you can't figure out why it doesn't apply to you, it would be that you don't have payroll, but there are other things, right? And like all of us have said, we all have resources listed everywhere of all of there's so many things out there, individual grants and everything that you could be going for. But do look into it, look into some counsel or something like that to see if you're just missing something. That would be what I would say, just in case.
And I would probably say, and Shane, in that situation, I would say, a company should look at the EIDL, the SBA's emergency injury disaster loan. That might be a better fit. There, as Emily mentioned, there's a ton of local and state emergency loan programs. So you want to look in and see if your city, if your state has emergency loan programs, and tap into those as well.
And then you can apply as a sole proprietor or your own independent 1099 as yourself. So to be clear, you need to back out 1099s if you're paying contractors. However, if you are the contractor or you count as a sole proprietorship of some kind, then you can apply via what's coming out tomorrow. So they get a lot of confusion around those two. So this person may apply to that possibly.
So one thing that a lot of people are debating is it better off with the additional federal unemployment benefit, which is substantial? Are my employees better off on unemployment? And in many cases, and this is probably a problem with the legislation, but in many cases, they're going to make more on unemployment. So, some of your employees actually may be angry with you if you decide to get the PPP and keep them employed when they could make more money on unemployment. But, and I also wanted to point out that individuals that take the PPP money will lose the retention credit as well. And there's also, I think there's a mixed opinion on this, but I'd say most people believe that, I forget the name of it, I'm looking at it here, the tax deferral incentive is probably lost as well if the loan is forgiven.
I believe
So
so.
it's not, there's alternatives that need to be considered and discussions with some of your key employees and other aspects of the CARES Act, including income tax, which we don't have time to talk about. Obviously, that's a whole different topic, but there's all kinds of other benefits that are available.
Awesome. So I know that we're at the bottom of our time frame. Jeremy, and I know there's still a lot of questions. How do you want to proceed? I believe that some of our panelists may have constraints. Believe it or not, we're working night and day right now. So what do you want to do moving forward?
So I would motion that we wrap up, and that John, if for those who are still in attendance, if we could create a link on slopeserves.com for those who still have questions, we would love to be as responsive as possible. Is that something that we can do, John Bowers?
Absolutely remarkable. You can actually go to slopes.com/COVID-19. I'll put this in the chat as well on YouTube right now. And you can also text 45426 and a live chat bot will begin answering your questions. Any questions that are not answered will them and submit slopeserves.com.
So let me recap because you were breaking up. Slopeserves.com/ is that COVID-19, John?
That is correct.
Okay.
And
then
they
Jeremy,
can also text 45426 for a live chat bot.
And as John said, John will put that into the YouTube chat, so it'll be there for this group to access. Awesome. Boy, what a great conversation. Thank you so much. Thank you for small business owners for tuning in. We hope this was helpful. Thank you to this great panel. I gotta tell you, Brock, Blake, that would be Brock Blake, and Blake Weathers, Emily, Shane, thank you for your participation. Stephen Brown, Rockstar, unbelievable discussion. Thanks for doing that. We will see those of you again who would like to participate next Thursday, 5 p.m., another 90 minutes. And we will dig into or dive into forgiveness. Hopefully between now and then you have applied and you have received funding. And we'll talk about clarity around forgiveness of those loans. And we'll also, we'll send out an email early next week just to define the content that we'll cover next Thursday evening. So wish you all the best. We're here to serve. Silicon Slopes really wants to make a difference, and we'll continue to do whatever we can to support the local business community. Thank you so much.